Hey folks, been missing me? Gotta be honest with you, I'm heartless. I hardly miss anyone with so much news around. I'm not a news freak, rather I look for news I can trade on and I find many. So in this episode, we'll discuss how you can find relevant news to what you trade and open trades on it. Let's go. You may already know about the two approaches to trading, technical and fundamental analysis. In this video, I'll explain the basics of both. Now, trading on the news is more about fundamental analysis. That means understanding the market, events around it, and their impact is very vital. First, understand which news is most impactful to your trading instrument. Yes, understanding starts right here. It's fundamental analysis. Naturally, different news affects different instruments. Interest rates, GDP growth rates, and inflation dynamics affect currency pairs. Quarterly earnings and corporate announcements make stocks move. Cryptocurrencies, well, they move whenever they please, so be careful with them. Once you've chosen the news to trade on, check the exact time and date when it is planned or expected to be released. That is when the price of your trading instrument can make a big move on it. Now, there are two ways to trade on the news in relation to the release time. The first one is opening a trade before the news release based on a price forecast. In this scenario, the main risk is that your price forecast is wrong. In fact, it is the main risk in trading. How can you reduce it? Make trading decisions based on solid analysis and effective tools. Spoiler alert for lazy traders, Olymp Trade's Insights is such a good tool. It provides time-sensitive price forecasts based on instrument-specific news. You'll find it all in the help sidebar on the platform. However, I'm an expert. I don't make those forecasts. Olymp Trade's experts do. The second approach is opening a trade after the news hits the market and the price moves on it. Here, you can open a trade against the news impact direction on an expectation that the price will shortly go into a correction and you will use it for profit making. Does it sound complicated? Let's break it down. Here is an example. You trade stock X, it costs $100. Then good news for that stock X hits the market and as a result, its price goes up $150. What do? You watch, it goes up and then it slows down. That's where you open a downtrend. You expect the price to go into a downward correction after the news caused uptrend, and that downtrend is what can bring you profit. I told you I'm an expert. So check out Olymp Trade's blog. You'll find lots of articles on trading there, including what I've just explained. I'm sure you'll find it very useful. Oh, we're out of time now. See you later.